In today's video, I'm doing a bit of a special on GameStop. Hello and welcome to another Acysecurities daily report video. My name is Alistair Schultz and I'm going to be a host through today's trading journey. And as I mentioned before, we're going to be talking about GameStop and its big rise at the moment. Now, where has it all really started from and what's been going on at the moment? Obviously, there's a lot of media attention about GameStop at the moment. Wall Street Bets, the Reddit forum, and quite a few other little small caps that are starting to see a bit of a rise now as well. So what's really going on and what are we really seeing right now? Well, really to have a look at all of this, we have to go back in time a little bit. We have to go back to August last year. Now in August last year, this man here, Ryan Cohen, is his name, originally the founder of Chewy.com, who became an investor after selling Chewy.com. Now in August, he decided to purchase a 10% stake in GameStop. Now it is a fairly large size, but at the time GameStop was a relatively small stock, or at least small valued company. Now realistically, when we look at what's going on in this situation and you look a little bit deeper into Ryan Cohen, this was an abnormal move for him. After making a bit more in excess of about $3 billion from the sale of Chewy.com, he's mostly dealt with sort of the returns and dividend-based stocks, things like Apple and some of the banking sort of elements that we might find on the stock market. Now, for him to go into what is considered to be probably a higher risk investment, he's gone into GameStop. Now, over the course of the next couple of months, we saw him picking up more and more and more pieces of it to eventually be able to sort of have a little bit of controlling power inside the company. Now, what we've seen from there is it's moved on. Now, realistically, when we look at GameStop as a company, they haven't had very good returns for quite some time. Being the brick and mortar company and in a retail element throughout a pandemic, it's not hard to imagine why. But even on a much longer time scale, I've got here on the chart behind me from 2006 until 2020, and we can see their revenues declining, their cash flows, and pretty much everything else that goes along the lines of it is really starting to degrade. And it's gotten worse and worse as time has gone on. Now, the reasoning behind this is likely got a lot to do with what happens in gaming technology and as we've moved to a more digitalization of it all. You can now download games as opposed to having to visit a brick and mortar store to actually purchase it. You also don't tend to get anything on the lines of subscription-based services, so it's no wonder why they're having a little bit of trouble maintaining that. We've even had a lot of store closures trying to account for the revenue going down as well. Now, when we look at what's going on from an investing point of view, GameStop is really a dead company to a lot of us. Looking at it, you would consider it to be a short position company, and you would always have considered it to be that way. Even now, it has not got the revenue or anything behind it that suggests it might be going up. But when we saw Ryan Cohen start to invest, it did prick up a couple of ears because he was the idea that might be trying to get the company to pivot. Even on his SEC recordings and the statements that came from that, he had this ideology about being able to revive the company by pivoting it into a new direction and becoming a little bit more like Amazon, an online retailer. Now, whilst that might be the case, there's still a lot of groundwork to get there and a lot of competition in that sector. So, from that sort of standpoint, when we think of this as an investor's stock or anything like that, it's probably not. It's actually one of those ones you wouldn't be considering buying, so it's amazing that a lot of people really have. Now, looking forward, we've coming forward in time a little bit here to see what's happened in the last couple of weeks. Now, in the last couple of months even, we have seen Wall Street Bets talking about GameStop. It has been trending a little bit. And in the last fortnight, we've really seen a lot of people diving in and putting their money where their mouth is to try and get this price to the stock to rise in value. Now, of course, that's exactly what happened. It's had a dramatic run of events. Considering back in August, it was worth about $2.80 a share. Now it's well over $347 a share. So even at a high, I think, of about $351 in the after hours action. So we are seeing this move in a strategically nigh impossible way at the moment. It's something that we wouldn't have actually precedented, and it's something that we certainly wouldn't have anticipated ever occurring. So it is something that has changed some of the ways that we think about fundamentals in the market. Now, what's gone on with Wall Street Bets? We've seen a lot of people using leveraged options to purchase this stock and get in a lot of value out of it. Obviously, they're getting a lot of money. There are some examples of guys that are taking $50,000 positions to $22 million positions. That's certainly been doing the rounds. I'm not the only one who hasn't seen it. There are plenty of others that have. So now what's gone on behind this? Well, really in the form of it, we've seen a lot of talk about what's happening with the short selling side of things. Now, a lot of people wouldn't be considering investing in GameStop like I indicated before, and so we had a lot of short positions starting to occur. A couple of companies or firms that are known to be short selling firms decided to go short on this position as well, and they have ultimately ended up exiting their position down the track. But regardless of that, we've seen basically what we call the short squeeze. It's when you've got less sellers than there are buyers, and they've tried to pile in as much money, and you end up basically with a battle between who has more money. The guys who have more money or the more positions end up getting a little bit of momentum. More people pile in, it rises again and it rises again. And this continues, and the pattern obviously keeps on going. Now, that doesn't necessarily mean it is the best way to go forward, but ultimately we need to think about its real worth here. At the end of the day, that's really what matters. Now, whilst we look at the price to value sort of ratio and everything else that might come into it, we've got $347 per share at the moment, with a price to book value of 68.2 times its actual value. So that is a very, very big jump, and it certainly puts it just behind Zoom if we were to look at it on the S&P 500 or even in the Russell 3000. Now, what is it really at the end of the day? If we think about this from a bit more of a fundamental scale, it's a brick and mortar retail business in the middle of a pandemic. They've been closing stores for an extensive period of time. Their cash flows have been declining and turning negative. The prospects of earning a dividend here are likely next to zero. So I don't believe in that being an opportunity. Now, if we look at April in 2020, we had a value or a market cap of this company of about $180 million. In January 2021, we've now got $22.66 billion. That's a massive difference in a 2-week time frame to make. Now, what am I guesstimating here as to what a real value? Perhaps somewhere in the vicinity of 1.25 billion, somewhere give or take a little bit on that, is probably a reasonable assumption at this very moment. But is it likely to stay that way? Unless we see a pivot or change in direction from GameStop, then likely their trajectory is going to remain the same that it's been over the last couple of years. You can see just how fast and how quickly the price of the stock has jumped on the chart behind me. You can see we've got lows in the $20 sort of range, all of a sudden $347 in a very, very short period of time. So it is an amazing turnover, but it doesn't necessarily give a lot of confidence for continuing on this path. In fact, whenever you do get a sheer cliff face like what this image behind me depicts, we will find it'll usually end up coming back down in the same direction. Now, what we're going to have a look at, should we really be investing in this? And this is something that I think a lot of people may not or consider it all that often. In this instance, it's a little bit like a hot potato. You know, you don't want to get stuck with it in your hands at the end of it because it means you're out of the game. And as much as you might want to call this the gamification of trading stocks, you know, to a degree, perhaps it is. And yes, there are certainly a lot of investors and professionals who might be thinking this is a little bit odd, or at least the fundamentals have totally disconnected from the root cause of what's actually happening. If you were to look at it just from a fundamental or a technical perspective, you wouldn't invest in it. So this is really being driven by a lot of hype or a little bit of mania and people wanting to get rich quick. And whilst that might be the case, it's not the best principles to be using when we consider investing, because it's a little bit different. We're thinking about the long-term consistent returns when it comes to that, not so much get rich overnight. Now, naturally, of course, some people have. But in this instance, that momentum is likely to evaporate. Whilst we've got the sheer cliff face that we saw before, rising prices going straight up and people's bank balances going straight up, there are going to be a lot of people who have jumped in at some stage along the way, and they're going to get caught with that hot potato, particularly if they've got expiry dates on their options that are probably not going to be beneficial for them in the long term. You'll quite often find that this will end up degrading its value very, very, very quickly. So in this instance, I'm not going to be planning on trying to actually recommending anyone get involved with this, especially at this point in time, because we don't know when the top is going to be. And you should never try and pick the top. You should just ride it all the way through if you can. But in this instance, you don't have any other markers that signify a reasonable level of support or resistance. There's no other fundamental data that suggests it's going to be able to maintain its current value. And of course, we have to wonder when we do how many people have actually been involved just from the Reddit or the social side of things, but how many other people have gotten involved from, say, an institutional level that have helped push the stock price even further, jumping in on the bandwagon. At some stage, there are going to be a number of people with much bigger accounts and bigger positions that decide to cash out their returns. At that point, we will likely see some pretty dramatic drops in the price of, obviously, GameStop, and it will fall back down quite quickly. Now, as for the other companies that are actually starting to go up at the moment, we're seeing AMC, we're seeing BlackBerry, and a variety of other smaller entities on the stock market that might be considered to have not too many positions on them. There might not be a lot of people, most of them might be short sellers, and very, very little on the long side. And we're seeing them actually jump up. And this is all sort of coming from the same sort of place. A little bit of notification, a couple of guys decide, yep, let's all go do this. It's all on a public forum, so you get a large degree of people doing it. Are they beating Wall Street? Well, at the end of the day, it looks like they are at this very moment. But I can't guarantee that that is going to be sustainable either, because at the end of the day, how much more money does a institutional sized investor such as a hedge fund have than what perhaps we would consider to be, retail investors overall? So I do need to stress this. Be wary about this sort of thing. Yes, of course, if there's opportunity, take it. But in this instance, I think the opportunity is starting to run out of that momentum already, and it would be a concern to try and hold on to a position longer than you should. Now, at the end of the day, do what you're going to do. I am not going to advocate for it, but if you do make money out of it, congratulations and well done. I look forward to the next time you do as well. Now, that's all we've really got for today's video. I do hope you have enjoyed it. Of course, if you have any questions on this, or you're not quite sure on some of the explanations, then please feel free to get in contact with me via any of the social media channels that you can see behind me on the screen right now, and I'll happily respond to them as soon as I possibly can. Otherwise, don't forget to like and subscribe this video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.